Good afternoon, everybody. It's going to be our Summary Markets episode 166. As always, we're going to start off with the calendar. Then we're going to move into ES, NASDAQ, Bitcoin, Ethereum. Then we're going to close it with the dollar and the euro. So starting off with the calendar, we do have a pretty busy week this week. It is a Fed week, so obviously we will have the Fed press conference on Wednesday. They will most likely be raising rates as well. But let's start off with Monday before that. So Monday, we're going to have PMI, manufacturing PMI at 9:45 and 10 o'clock. So make sure you watch out for that. PMI data typically is very high impact. So that will be coming out right after the bell. Moving on to Tuesday, we have JOLTS job openings coming out at 10 o'clock. That is also a pretty high impact data point. So make sure you are watching out for that. That will once again be after the bell as well. Moving on to Wednesday, this is the big day for this week. We have non-farm employment coming out at 8:15, so that's going to be pre-market. Then we have some data coming out right after the bell with the services PMI. That's going to be at 9:45 and 10 a.m. And then finally, we have the Fed statement coming out at 2 p.m., which most likely will be a 25 basis point rate hike. And then we will have the Fed press conference at 2:30. Moving on to Thursday, we do have some high impact data coming out for the euro and the dollar. So the euro will have their banking statement. Most likely will be a 25 basis point rate hike as well. That will be coming out around 8:15 a.m. So just before the bell on the US market. And then another thing pre-market, we have unemployment claims. That's going to be coming out at 8:30 a.m. So about an hour before the morning bell. And then we have an ECB press conference at 8:45. So make sure to watch out for that. Finally, on Friday, we have some more employment data. So we have the average hourly earnings coming out at 8:30, non-farm employment change, and the unemployment rate. All of that is coming out at 8:30. So that's all going to be pre-market. Okay. So a lot of data this week. The biggest things to watch out for definitely is going to be the Fed conference on Wednesday and then the Euro conference on Thursday. Those will dictate kind of how we're moving in the macro markets. All right, moving on to the price chart here. We're going to start off with ES as we always do. We're going to start off with the weekly profile. So we're going to go 1, 2, 3, 4, 5, going back to Sunday here. We're going to get our weekly profile from last week. Let's go ahead and mark out the value area low. Let's make sure that's dotted for the weekly. We're going to mark out the POC. And we're going to mark out the value area high. So looking at last week's profile, it looks like we are closing towards the high of that profile. So very bullish close there. Getting some value outside that value area high right into that Friday candle. So with Friday, we want to keep an eye on the value area low trading at 63. And we want to keep an eye on that value area high trading at 92. If we can break that 92 level, we're looking for a breakout target of 42.08 and then possibly a value retrace into 42.49 and then 43.05. These levels are pretty old. They're dating all the way back to August of 2022 because those are the breakout targets we're looking for if we can finally break this monthly high. So the monthly candle on April is going to be closing on this Sunday. So we have a little bit of price action today, which is going to start at 6 p.m. And then once that is over, that will close the monthly candle. So monthly candle so far, not looking too bad. We did want to see this monthly candle close above 4,200, but it closed a little weak. So far, it's at 41.88. So maybe with this Sunday open, today's open, we can get like a 12 to 20 point bounce, and then we could close above that 4,200. Obviously, we'll have to keep an eye on it, see what it does later today. For now, not looking too bad. We did close above that 4,100, which was that key high. We needed to break this high structure on the monthly, which was right around 4,100 to 4,150. So even if we close here, not looking terrible, but we definitely want to see it close above 4,200. To the downside, if we start pushing back below, I would say around 4150, we're looking pretty weak, possibly back into a value retrace of 4108, and then maybe even sweeping the low way back into 4080. So obviously we have to keep an eye on how all that data comes out this week. We have to see how the Fed reacts on Wednesday. Most likely it will be a 25 basis point rate hike. I think it's being priced in right now at over 80%, 80% confidence, I would say, for that 25 basis point rate hike. If that does start shifting to a no hike or a 50 basis point hike, depending on how the news comes out, that will definitely dictate how the market is moving this week. So keep an eye on that. But for now, they're betting on 25 basis points. But okay, so you're leaning bullish above 4,200. You're leaning bearish kind of below 4,150. All right, moving on to NASDAQ. Let's go ahead and get rid of all these older levels that were tested this week. And let's start fresh with our weekly levels. So 1, 2, 3, 4, 5, going back to Monday. Let's go ahead and mark out last week's profile. So we have the value area high there. We have the POC right here. And then we have the value area low right there. All right. And same thing with NASDAQ, closing well above the value area high of last week. So nice little push into that weekly close, finding some value above that value area high. So make sure we keep an eye on the value area low of Friday, the value area high of Friday, and then the high of Friday as well. So if Sunday starts breaking out of this high, keep an eye on that 348 level as a resistance. And then we're looking for a possible value retrace of 484 and then 564. Moving to the downside, if we start finding value back below 180, possibly looking for a weekly value retrace, we could look for a value retrace of Thursday, which would go down to 13,040. And then we could look for a value retrace of the entire last week, going down to 12,833. Okay, so that bearish kind of line in the sand, I'd say, is last week's value area high. And the bullish line in the sand would be probably above 350 to 360 on that high side. All right, moving on to Bitcoin here. Bitcoin still trying to stay above that distribution level. You can see we kind of came down and tested the range low there, popped a little early, and now we are retesting the high of that distribution. So we broke out on April 27th, and then we had two little micro dojis, micro pullback candles, and then we had that candle as well. So about 3 micro pullback candles pulling back above that distribution high. And for now, all of them are maintaining above that high. So it looks slightly bullish. You do have a nasty upper wick right here on today's candle. But overall, you are staying above the distribution high. So if it can stay above 28.9, we are looking for that previous high around 31,000. If it does start to lose this level below 28.9, you do want to look for the middle of the range around 27.7, and then possibly the low of the range around 26.5. For now, I would lean bullish above that range high. Okay, moving on to Ethereum. Basically the same thing on Ethereum. You did pull back to retest that distribution high. For now, it is bouncing off of it. We gave that level that we were looking at last week, 1934. That actually ended up being the high of this week. So clean retest there on Wednesday, and then Thursday was not able to go for that secondary break. So now you are a little bearish below 1934, possibly back into the range high around 1846. But as long as it stays above that 1850-ish, 1840-ish, that little area right there, it does look slightly bullish, but definitely failing this level here is slightly bearish. So you're kind of stuck in like a no trade zone here, unless you want to sell it back down into that range high. If it can break back above this level at 1934, look for that old range back into 2050, possibly into that range high. All right, let's move on. Actually, let's cover oil really quickly, and then we will move on to the dollar and the euro. So looking at oil, we had a little gap fill play here. We talked about this way back. If you guys remember at the start of April, we had this really nice gap up, which was right on the middle of the range, but we were not able to stay above that range high. So there's a very clear resistance that is trading around the low 80s, 81 to like 85-ish. We keep getting sold off right around that level. So you try to go for a breakout here into 83, and then it's sold right back into that gap fill. So now that gap has been filled. You are safe to go higher here if it can stay back above that middle of the range around 76. So if it stays above 76 here, look for this downtrend to break, and then you could possibly look for that 81 area again. If we cannot break this downtrend, most likely going to sweep this low back into the low of the range right around, where would that level be? Right around 70. So keep an eye on that downtrend. If it doesn't break, look for a sweep of the low into 70. Okay, last but not least, let's talk about the dollar and the euro. So the correlations are still quite weak. They're not at a tradable level. Hopefully with this Fed meeting and the European meeting, they will bring back the correlation so we can start using it more in our day trading. But as of right now, we cannot really use the dollar or the euro in our day trading for ES. There is no correlation for the intraday. So looking at the dollar as its own entity, not as a correlation, if we can start breaking back above 102 to 102.50, this could start breaking this downtrend, possibly back into that 200-day EMA around 104. If we do not break this downtrend, we are most likely going back into 100 if we break that low around 100.8. Now let's set some alerts here for that meeting, so we remember to keep an eye on these levels. So 102.50, that will be our upside alert. And then anything below 100.7 will be our downside alert. But definitely watch how that data comes out this week. It will determine how the dollar is moving. All right, last but not least, let's talk about the euro here. So the euro is obviously inverse dollar. So basically just take what we just said and flip it. If the euro can break the high up here, we're going to set an alert above 111. We're going to look for 112.15, and we don't have any targets above that. So let's go grab some more targets here. Let's take a look. It looks like there was an old gap here. We can keep an eye on that, which is around 112.7. And then let's look at this previous high way up here, which would be around 115. So if things go very bullish for the euro this week, obviously with that European conference, we could look for those breakout targets. If it goes bearish here, look for anything below, I would say, this previous low here, which would be around 109.5. We could be going straight back down to that previous high, which led to a really nasty sell-off right around 108. Okay, so let's set an alert just below that level, and that should send us down to around 108. But all right, guys, that is it for the summary of markets. Hopefully you guys enjoyed this video. Make sure to hit that like button if you did. I will be streaming all week this week, so Monday through Friday, 9:30 in the morning. We will also have an extra stream for the Fed meeting on Wednesday. So we'll be streaming in the morning on Wednesday and the afternoon on Wednesday. So if you guys want to stop back by for the live stream, make sure to hit that subscribe button, and I will be seeing you guys tomorrow at 9:30. Enjoy the rest of your weekend.